What's up, everyone? It's Scotty with Money Vesting. What do we have over here? A very, very strong rally for the markets. Hopefully this stream is going to be much better than the one that I was doing earlier just a few hours ago when the market opened. Of course, that was completely different. Just a few minutes, wanted to go live, show you guys a little bit around. But look at the markets here. S&P up over 2.3%. We've got the NASDAQ up over 2.66%, back over 11,000. We got the Dow Jones pushing up over 800 points, despite the yields are going higher, back over 4%. So Kevin says live from the Alps. It is. Yeah, that was a little bit of a different live stream. I am going to go back and watch that video, see how that came out from both a connection standpoint, from audio video standpoint. I don't have high expectations, but should be all set. So Kevin says, I can't see you, Caddy. Is that true? You guys can't see me right now? Is the audio and the video going well? I owe you guys a really long live stream. That's why I wanted to go live as soon as I came back to the hotel room, and just literally just go live for the market open here. So Ranjit, welcome on board. Thank you so much for joining. Perfect. I'm great. I'm gonna get some drink here because really it's been exhausting last 8-9 hours. Just been traveling a lot. So really just been so thirsty. But anyway, so Ranjit says, I thought I will see an alpine background from Swiss. I will show you guys some pictures and some nice videos that I've been taking. I'll show that in the market update. I'll start the video with that and show you guys a little bit around. It's been a really fun trip, to be honest. It's been great, but definitely very expensive. Switzerland is not cheap. It's very expensive. So I will share some of my vacation videos as well. But anyway, talking a little bit about the markets, the yields are pushing back higher. We did get the PCE numbers today, so personal consumption expenditure. So that came in for the month of September in line with expectations. So the personal consumption expenditure in September increased 0.5% from the previous month, 5.1% year over year. So including food, energy, PCE inflation rose 0.3% for the month and 6.2% on a year-over-year basis. So, both of these numbers are coming in once again a little bit higher than what the what we would like them to be. They were in line with consensus expectations, but they're both higher than what the Fed's target is. So, the core PCE 0.5% increase month over month, annualized at 6%, year over year right now 5.1%, and including food and energy, so the actual headline PCE jumping 0.3%, annualized at 3.6%, and year over year it's at 6.2% right now. So a little bit decelerating right now because of energy prices rolling over, but of course in the month of October there definitely is a little bit higher. So perfect. Ranjit says, I see it in your Insta. Yeah, I mean, it's been a lot of fun. Like I said, it's been absolutely an incredible trip. Still have about a week left. So going to this small town called Zermatt in the next couple days, and then we'll be making a trip over to Milan before I head over back to India. So it's been great. Amazon has recovered quite a bit, right? So Amazon has had just an insane intraday rally. From lows of about $87, it's gone up over 17%. Talk about volatility. It's just been enormous dip bought here for Amazon. So low for today, literally like 97.66, right? If you see this rectangle, literally to the T, Amazon comes down to that fair value $97,700, and then literally just starts pushing higher, gets bought up. Look at the amount of volume and just this green candle, massive green candle with the amount of buyers stepping in. So, in my yesterday's market update video, there was a very clear message that I wanted to, get across in that video. And that was, I don't know how many of you guys actually checked out the video, the market update video, all the way through the end. But in the end, like if you go towards, I think the last couple minutes or last 3-5 minutes of that video, there was a very clear message, right? A lot of these companies are trading at dirt cheap valuations, right? Dirt cheap, right? They're trading at valuations they haven't seen in forever, right? For example, Google, AMD, Meta, like Netflix, a lot of these companies, even, I can make a case for Tesla, right? Because it hasn't really seen that valuation ever. trading at roughly 55 times earnings. Yes, some can make a case that it's still overvalued at 55 times earnings, but on a PEG ratio basis, it's really not. I mean, if the company's earnings are growing at 100% or 75%, it's coming down to very, very reasonable levels, right? So the markets always overshoots to the downside. There will be overreactions. There will be sentiments that play a big role in the overall market, and that's really what we're here to take advantage of, right? So it's really, really important for us to distinguish between all the noise and what's really the core here, and that is that a lot of these companies are trading at valuations we've never seen before. And do we want to be sellers or buyers in this environment, right? Really, that's what it comes down to. Now, that being said, the macro picture is still unresolved, right? So we can still we obviously know, and we've been studying it for some time, that interest rates are still going higher, unless of course the Fed decides that they want to really put a stop to what they're doing, considering what's going on within the U.S. and of course globally as well. But until that happens, we know inflation's still a problem. Interest rates are still going higher. So from that perspective, sure, there's going to be potentially some more pain in the future. But that shouldn't stop us from taking advantage of these opportunities if and when they actually come by. So, all right, Kevin says, I watch all your videos to the very end. Thanks, Kevin. I really appreciate it, man. You're a true fan. I really, really appreciate that. Ali says, we use those companies' products every day and they would not die anytime soon. That you told us it's a temporary now. Exactly, right? I mean, we pretty much use their products every day. And, despite all the macroeconomic challenges, these companies are still able to post good numbers. They're not great. By no means their best. They're not great either. They're decent, right? They're not extremely bad. So I think that's what it comes down to. And one of the really good tricks is that if you simply just take away the analyst estimates, right? If you simply take a look at the numbers, if you go to a CNBC article and you just strip out the analyst estimates and you just look at the numbers and whether they grew or they declined, if you just look at those, that's a much better way objectively looking at them versus just always comparing whether they missed or they beat on their numbers versus the analyst expectations. Because in my opinion, that's a very flawed way of looking at it, because if the revenue grows, let's say 10%, and the next line you hear is that it grew 10% but they missed on the expectations, that all of a sudden creates this negative sentiment, does it not? Like if I tell you that company missed revenues and earnings estimates, that automatically creates this negative sentiment. But if I tell you, despite missing, that company grew revenues and earnings by 10% or 15% and earnings by 10-15%, then there's going to be a different sort of sentimental value to that. So that's the whole point here, is that's exactly why I like to strip out of all estimates here. Just look at the company objectively, whether they grew or they declined, and what were the reasons behind it. So again, thank you so much for joining, everybody. I really appreciate it. I owe you guys a very, very long market close live stream, and that's exactly what I'm going to be doing here. I'm going to take a look at some stocks. We're going to analyze some things. We're going to look at some trade ideas. Ranjit, I know you've got very good trade ideas here. If you have anything, Mohit, you also let me know, and I'm happy to go over those as well. Let's see. Indices is not correct, but all mega cap decline on earnings. So is this a mirage of a bull run? Yeah, I mean, except for Apple, right? Apple is the only stock that actually did not decline on earnings. Instead, it went up over 7.8%. I was reading something earlier that pretty much suggested that Apple's earnings received a drastically different reaction from investors than its big tech peers, Amazon, Google, Microsoft, and Meta. And the reason is really because Apple is seen as a safe haven, right? It's seen as like a staple stock where everyone can just pile on and use it as cash, right? That's literally it. Like the same cannot be said for Amazon, Google, Microsoft, or Meta, right? If I were to put them in a tier list, I would put Meta at the very bottom, then I'd put Amazon, then I would put Google, then I would put Microsoft, and at the very top, it would be Apple, right? Apple is kind of seen as like that staple stock, that safe haven where everybody can and will just plow their money into Apple, regardless of what the numbers end up looking like. So really, that's what we have seen. It's kind of like Apple looks like a relatively safe port in the storm. Investors fled from other big tech stocks this week. Microsoft and Alphabet had their worst days of the year on Wednesday. Meta had its second worst day on Thursday. Amazon was down about 10% Friday morning after reporting earnings Thursday. And the reasons varied. Obviously, all these companies did have a lot of problems, but Apple now looks a lot more stable than its peers, especially as fears of a recession started weighing on ad sales and potentially holiday spending. It's largely because Apple relies on hardware and services that people are still buying. And as a result, again, Apple pushing up over 7%, which is a pretty substantial move, actually 8% now, up to 156. I did upgrade my fair value a little bit on Apple, considering the previous growth rates and the P multiple. I posted that video earlier today. So that obviously is being reflected in the stock price now. And I see you guys talking a lot about Twitter. So Twitter's fair value, Ray is asking. Twitter is getting delisted. Let's take a look. I know that there's been a lot of layoffs going on Twitter. So I think that I read something earlier. There was a lot of, and of course we all saw that Elon Musk's meme of bringing in a sink, and pretty much the quote, "Let that sink in." So yes, the FOMC meeting is going to be November 1st, 2nd. What to expect in your opinion? Ranjit, 75 basis points is a done deal in my view. I think the guidance is going to be for 50 basis points. That's at least what my expectation is, because we've heard from a lot of other Fed members. Well, it's been kind of like a mixed bag, right? Few of them have said that they are going to raise rates until inflation's back under control, but some of them have mentioned that they're going to take into account that they don't over tighten, right? They want to make sure that they don't over tighten. So it's been a little bit of a mixed bag, but I think it's been mostly leaning towards the fact that they don't want to over tighten, because they've been getting a little bit of political pressure as well, as midterm elections are right around the corner. So I think 75 basis points is done. I'd be really, really surprised if Jerome Powell comes under any political pressure and only goes for 50 basis points. I'd be very shocked, because in the past, he's always told us in the FOMC meetings that that's never a decision-making sort of consideration. They never get under the influence of political parties, and regardless of what type of elections are going on, they're going to be focusing on doing their job, which is kind of the monetary policy dual mandate and fixing inflation, fixing unemployment, all those things. So I think 75 basis points is done. Again, like I said, I'd be very shocked if they do 50 basis points. But I think the guidance could be for 50 basis points. Right now, as it stands, we are for, I believe, 75. So let's see. Oleg says, no shock, 50 is 50. It will be accurate as they overdone. So I agree. I think the Fed is over tightening, but we haven't really seen any of those data points. Like unemployment, it is going to go up, but we haven't quite seen that yet. So in my opinion, it will go up to 5, maybe 6% if the Fed keeps raising rates. Right now, the consensus is for 75 basis points, so 83% expectations for 75 basis points. So yes, Kevin says 86% chance of 75 basis points, so 83, 84% for 75 basis points, and then about a 16% probability for 50. And then if you take a look at, future guidance, which is for December meeting, we're looking at about 48% probability for 4.25 to 4.5%, that's going to be 50 basis points, right? So, but it's very close. If you take a look at 48% versus 44%, we're very, very close. We're very close between 50 and 75 for December. So it's going to be interesting. And then, of course, for February, we're for another 50 or 25, depending on what we do for December. But the interest rate, the bottom line is they're going to be up to 5%. Interest rates are going to be up to 5%, either by the end of this year or early next year. So, at 5%, there's going to be a lot of things that will really start to kind of show up in the economy that start breaking apart, which is unemployment starts going higher, economic growth starts weakening, and then of course companies also start citing very, very interesting things from a consumer demand standpoint. Another thing that I'm really waiting for is for FactSet to put together their earnings report. This is very, very insightful. Really, really critical in understanding what type of earnings we're getting from these companies. And this is from October 24th. So again, I'm just waiting for a new update on these earnings insights. And once we get those, I will be breaking that down and literally just go over how we kind of wrapped up this earnings season. So we're done with the big tech, obviously, but going into next week, we still have a lot of companies. We still have AMD, we still have NVIDIA, we still have PayPal, we still have Block, we still have, I think Shopify already reported, but a lot of other companies are still yet to report, kind of like that next tier, right? The big tech's over, the next tier of growth tech is going to be reporting. So that is going to be equally important for the markets. And I think NVIDIA and AMD have already pre-announced their earnings, so it should not come as a surprise. I think they've already dropped dropped on their pre-announcement. So should be very, very interesting what else they have to say in the earnings call. Yes, Intel's up 10% on today, and that's fantastic. They mentioned that they are going to be cutting costs, and that's exactly what Meta needed. Literally, like one statement from Mark Zuckerberg could have literally just pushed the stock 10-20%, but no, we're going to keep investing in the metaverse despite the economy is weakening, despite the consumer is slowing down, despite recession fears, despite interest rates going higher. So read the room, Zuckerberg. But anyway, so Intel here up 10%, beat on revenue, beat on earnings. That's very good. And then of course, cost cutting measures. That's really what investors want to see. Like, bottom line is, if you're cutting cost, right? If companies are spending less on R&D, what does that mean? Why would that make investors happy? This should be very simple, right? It should be very, very easy to understand. Why would that make investors happy if they're cutting R&D cost, right? If they're spending less. Let's see. Shit. Are you asking about Meta? No, just in general. In general, why would investors be happy if companies start cutting cost? Higher EPS. Yeah, Richard got it. Higher EPS, right? So exactly, higher earnings, right? So if there's less expenses, that's going to lead to higher earnings, and that's exactly what Intel said, right? $10 billion less, and literally everything, and free cash flow as well. So Sammy is also right. Both earnings and free cash flow, obviously much higher if the company ends up spending less. And that's exactly what we wanted for Meta too. But well, instead we got higher expenditures, higher CapEx. So that's resulting in the stock price getting hammered. So Nasdaq up 2.75%. Rose says drinking some of that cool Alpine water. It's a Powerade. It's not an Alpine water, dude. It's just a Powerade. It is Mountain Blast though. Like, kind of makes sense, It's went to a mountain, had a blast. Definitely had to go for the Mountain Blast. But yeah, S&P 500 up 2.3%. So definitely pushing higher quite a bit. We got the Nasdaq, Dow Jones all pushing up. So anyway, so what are we looking at? So if there's any companies you want me to analyze, I'm gonna do a video on Meta over the weekend. I'm gonna do a video on Amazon as well. So both of them are gonna be coming out. Tesla's up over 1.5%. Google and Microsoft we've already covered. We also covered the earnings call. We covered the earnings call for Meta as well. But a dedicated video for Meta and for Amazon is going to be coming out. Google, Microsoft, Apple are all done. And then I'll also do a video on Shopify as well. So all earnings videos, I promise they will be released this weekend with all my updated fair values. So yeah, SoFi earnings are also coming up. How is SoFi doing? Just a little bit over 540. So it has been consolidating sideways. I mean, if you take a look, it's just been inside that support level here, really in that green rectangle. Do I think Meta is going to come down to under $96? Any insight on share buyback amount committed by Meta? Not that I'm sure of, but they really should be buying shares. Like, they really should be, buying a lot of shares. Like, literally just dump whatever additional free cash flow or cash they have to just buy back shares, because market cap at 266 billion, they're trading at under 2 times sales, and I think under 10 times earnings. Look at that. 9.3 times earnings for this company. Just absolutely brutal. So in my opinion, they should absolutely be buying back shares right now, like in truckloads. Literally, like, there should be trucks parked outside of Meta's office and be shoved with shares. Literally, they should be, like, Zuckerberg himself should be shoving shares in that truck right now. That's how cheap the stock right now is. But let's see. Yes, too bad that he's dumping all that cash in the Reality Labs. I know. That's what he's doing. Instead, there's another truck sitting virtually next to the share buyback truck, and he's just like, nope, this one's the one I'm going for. And he's just like throwing all that cash in there. So some of the stocks like Upstart, etc., will never see their all-time highs in 5 years. Well, yeah. I mean, from a percentage standpoint, they've got a mountain to climb. You know, Upstart would need to go up like 1,700% in order to get to those levels. And but yes, I'm glad you mentioned 5 years, Ranjit, because I would definitely not rule them out from like forever basis. Like, you know, I would have definitely pushed back a little bit if you said that they're never going to see their all-time highs ever. But yes, in the next 5 years, I mean, of course, given the current macro environment and everything that's going on, it's going to be a tough time for them to get back up to where they were. But I would still not write them off. You never know, you know, what happens with a company over the long term, because, like I said, they're just so dynamic. A lot of things can happen. You know, same thing could have been said for Amazon when it dropped like this. You know, 95%. Right here, people might have said, oh, Amazon's never going to go back to all-time highs, because going up to all-time highs would have been like a 2,000% increase. And look what ended up happening over the next 20 years for Amazon. It not only went up 2,000%, it went up over 44,000%. You know, so lots can change, lots can happen for a lot of companies. So I don't think it's ever you know, responsible for us to write off a company completely. But yes, I think in the next 3 to 5 years, it's going to be a bit of a challenge, and Upstart and, you know, and the likes have a mountain to climb here. All right. So Swapnil, what is your updated fair value for Shopify and Amazon? So Shopify is going to be still uncalculated, and the reason is because they actually reported negative earnings. So we don't have a profit yet, right? We don't. Like, there's no way for me to project out earnings because the company still needs to turn the corner towards profitability. Like, if you have no earnings, we have nowhere to forecast what those earnings might be in the future. I may take a look at the free cash flow for the company, and we might run a DCF model, like a discounted cash flow model, to see what that fair value might end up. Or I might do a price to sales model to see where that market cap should be for Shopify based on sales growth. So those are a couple different measures that I will potentially use when I'm doing my Shopify video. But Amazon, I will be updating in a separate video as well, because Amazon did report, I think, 28 cents beat on earnings per share versus expectations, and revenue was just a small mess, right? Less than $300 million. That's literally like, you know, Amazon's revenue like in 2 days or something, like 3 days, whatever. So we'll do a video on Amazon and a more dedicated video on Shopify as well. All right, let's see. Swapnil, did you read Cathie Wood's 2030 Tesla stock price prediction? Is that a new prediction? Is that the one that she's already released a couple months ago? Like, because I've already done a video on that. Is that like an updated, brand new, revised prediction for Tesla for 2030? Or is that like an old one that you're referring to? If it's an old one, then we've already covered that on the channel. If it's a brand new one, like we're talking came out last couple days, then I may not have looked at it. Ranji says, all the pre-market lows after earnings for big cap, we'll see them again for sure, in my opinion. Yeah, I mean, really, you know, bottom line is the macros, right? If that still remains unresolved, you know, all we are really going through is technical rallies and some obviously some push higher in a bear market. But the overall trend is still downtrending, right? We're still in the context of a lower high and lower low. Like, it's not rocket science for us to understand that, look, overall, we're still in the context of this downtrend, right? We're still making lower highs and lower lows. We're not breaking out above our moving averages. We're not like making higher highs. We're not having those breakouts yet. So until then, this is not a dip, right? This has never been a dip. We've talked about this on the channel, but this is literally a lower low, right? This is a new low for the markets, and it's not a dip. So Nima, you didn't say your buy target on Amazon? I haven't calculated it yet. Like I said, I will be doing a video on over the weekend for Amazon, and we will be calculating that. So right now it's still as low 100s, just like it was in the past. Like, Amazon literally got bought up from $97 today. It's back over 102. But I will be updating it, right? So when I do the video, I will update it. I will update the spreadsheet. And ready, yes, Twitter's been replaced a long time ago in our market update videos. Twitter was replaced months ago. We replaced it with Shopify. I think Shopify is the one that we were looking at. Oleg says if Fed makes even a small signal of slowdown, there is no way that we will see lows again. That's true. I mean, really, like I said, the macros, if the Fed starts to kind of pivot, even hints like, okay, so we know what happens when the Fed doesn't pivot. Obviously, they haven't pivoted yet, but the market starts expecting a pivot, right? We know what happens when the market anticipates a pivot. We see just these massive rallies, like green candles after green candles, right? Literally just, stocks getting bought up left and right, front and center, like everything starts to rip, right? Even on an anticipation of a pivot. Now imagine what will happen if we actually see one or if we get a hint of one, So that's exactly one of the reasons why I really think that I personally want to be invested in the market rather than just like timing the pivot here from the market. Yeah, so Road to Financial Freedom says, I tried explaining that to a couple of people. Not long by the dip is a strategy in uptrends, not downtrends. This is not a dip. Right. That's a very good example. And, really, we've talked about this, but if you take a look at Microsoft, right? If you take a look at what this entire uptrend was all about, and you look at the moving averages, this is a good example of buying the dip, right? So you got so many dips in an uptrend, right? Over here, perfect validation of that moving averages, perfect validation of those moving averages, and then of course couple dips over here, very very nice dips over here. You come back a little bit, some nice pullbacks, some nice dips over here, dips over here. So what we're seeing is an overall uptrend for Microsoft, right? It's going higher above those moving averages. But once that breaks, right? So we get that breakdown over here. Now this is not a dip. Like these are not dips, right? This is no longer a dip because we are overall in a downtrend, right? We're making lower highs and lower lows. We're trading below the moving averages. So really, really important to make that distinction. Otherwise, we can get caught up on the wrong side of the trade here. All right. So Swapnil, is the next tech earnings season going to be more brutal than this earnings season? Great question. Who's going to answer that? Let's see. I have my own thoughts. I have my own views. I will share them. But who's going to answer that? Let me see. Let's see. I'm going to wait a couple minutes. Get a drink in. My Mountain Blast Powerade. All right, make a poll. Let's just do a poll here very quickly. We'll do a poll. Oh, you can start a Q&A? That's pretty cool. I think that's brand new. Earlier it was only start a poll. Now you can actually create a Q&A as well. That's pretty cool. We'll do that. We'll try that sometime. Will the next earnings season be more brutal than the current earnings season? I'm gonna do yes, more brutal. No, not as brutal as this, or no, it's too much confusion. I'll just do no. And then, yeah, I think that's gonna be it. All right, let's see. So I think, in my opinion, if interest rates keep going higher, earnings will keep deteriorating. That's the bottom line. And that's simply based on, just logic, right? Nothing else. We're already starting to see guidance is not coming in at par with expectations. Amazon, below expectations. Meta, below expectations. I think Google was also slightly weak on expectations. Microsoft, I think, was weak on expectations too. So, those are the reasons why these stocks also dropped after hours. So, love to have Oscar back. More brutal. So really, I think if interest rates keep going higher, earnings are going to deteriorate. That's plain and simple. Like if you get up to 5%, 6%, 7%, if interest rates and the bond yields keep pushing up, it's not a surprise. It's no doubt that that earnings are going to deteriorate. So Frank says we need more pain for the Fed to finally pivot. Political pressure needs to come in with blood in the streets. Yeah, I mean, political pressure is already coming in, but what I was saying earlier was, I don't see Jerome Powell getting swayed by that political pressure. I think he's going to be mostly focused on, what the goals are for the monetary policy. At least I hope it is. He's not going to get influenced by whatever someone has to say, depending on whichever party they belong to. But of course, midterm elections are coming up. That's going to ramp up substantially, especially in the first week of November. That Jerome Powell is going to be literally just, it's going to be front and center. Like, everyone's going to be focusing on him. And of course, we're going to see what he ends up doing. But I at least hope that he's not going to be swayed or influenced by, what people have to say. So, but if we keep seeing rate hikes, 75 for November, another 50 for December, the markets are going to be in this choppy range where we continue to trade either sideways or make new lows. It's very difficult for the markets to really find any type of momentum in this environment. And unemployment obviously is going to be that driver for pain. That's the one thing that the Fed's been citing for so long, that look, unemployment's low, the market can handle it. Unemployment's so low, the economy can handle it. So Kevin is asking, why don't these analysts lower their expectations so all these companies beat? I think they did lower it, but I don't think they've still come down. Another thing that I'm really excited about, Kevin, by the way, thanks for reminding me, is the 2022 EPS. What's going to be that earnings per share for 2022? Right now, we're still pegged at 226 to 230. That's going to be that number. But, if that doesn't come down and we end up down, actual numbers are much lower. If they are, then the P multiple is going to be once again much higher for the S&P 500, and I'm really curious as to why they're not lowering them. So I'm on the same boat as you, Kevin, that they should be lowering the 2022 earnings per share by now, but we're still not seeing it. So Oleg brings up a good point. Yes, the markets are forward-looking. I agree on that. But there's no way to down anymore. Hikes are less probable as the Fed members starting to be dovish and they vote. Sure. I mean, yeah, we've heard from a couple members. They want to make sure that they don't over-tighten, and we're definitely towards the tail end of this hiking cycle. Let me just put it this way: we're closer to the end than we are to the beginning of the rate hikes, right? So we're much, much closer to the end of this hiking cycle than we are to the beginning, and of course in the middle, right? So we're much closer to the end. We might still have 3 more meetings, November, December, February, for rate hikes. The degree of those rate hikes obviously is going to definitely play a bigger role for where the market ends up trading and how we end up doing. But can we see new lows? Absolutely. I think if the rates go up as aggressively as they're projected to, earnings start to deteriorate even more. And I think first quarter 23 is when the earnings will really take a hit. There's going to be a bigger recession fear, and unemployment will also start going up. That's when I think we might end up with a new low. All right. Soros says, note that the market bottoms usually after the Fed pivots. Not necessarily though. Remember that study that we did just a couple videos ago? We talked about how the market in the past, actually during the 1980s, in the Great Inflation, the market ended up bottoming with what? It wasn't the interest rate controlled by the Fed, it was something else. Pop quiz here. Let's see who else got it. Who else has been watching my videos? Kevin should have it, but let's see. We talked about this, right? I presented 2 charts. One of them was from the Great Inflation, 1980s. The market ended up bottoming before the Fed pivoted, and this was in tandem with something else, right? It was another thing. The 10-year yield, yes. Road to Financial Freedom got it. The 10-year yield, right? The 10-year yield was something that topped at, I think, 14% or something. It was crazy back then. 14%, and the market bottomed, I think, 2 or 3 rate hikes before the Fed pivoted. Yeah, so Kevin says yields, Oleg says yields. Yes, correct. It was a 10-year yield, right? So that's why we're paying very close attention to the 10-year yields too, because every time we get a little bit of a pop, we come down, we rally back higher, and then right now we're back down, and right now we're pushing back higher. So it's been on a very, very strong uptrend. We'll see what ends up happening, but I wouldn't necessarily call the interest rates by the Fed a key indicator, because historically it's been the 10-year yield. Because the interest rates by the Fed is very, very slow moving, right? It doesn't move every month. It doesn't move every other month. Like, in fact, it only moves like 8 times a year. Only the times when the Fed actually ends up meeting, right? And even then, so like if they don't make any changes to the interest rates, it doesn't move. The 10-year yield moves every day, right? So it's a much better indicator of market sentiment and, of course, economic sentiment and where the market end up might be. Theron, it is going to be a little bit of a headwind. Just depends on trade and manufacturing, and the GDP growth was still good, came in below expectations because of those reasons. I think it came in at 2.6% growth versus 5.5%, so it was way, way below. I think that was one of the days when Xi Jinping also got announced in the third term for CCP. Chinese stocks absolutely got brutalized. They were down like 16, 17, 18, 20%. So really ends up, the question is, whether their manufacturing can continue to sustain despite the zero COVID policy, and of course their trade supplies and then the global supply chain issues. Like, does that remain open, or because of the zero COVID policies, does that get shut down? So is pivot usually when the Fed stops raising rates or when it actively cuts? Great question. When they stop raising rates, that's more of a passive pivot. When they actually start cutting rates, that's more of an active pivot, right? So in other words, right now they're doing quantitative tightening, right? Once they stop raising rates, that's not quantitative easing. That's not by any means the definition of quantitative easing. Just because they stop raising rates doesn't mean it's quantitative easing. It just means that they're not doing quantitative tightening anymore. And when they start cutting rates, that is going to be quantitative easing. Now, there's different ways. Like, you can obviously look at passive quantitative easing, passive quantitative tightening versus active. Like, for example, if they actually start buying bonds to stabilize the interest rates, that's going to be a little bit more active quantitative easing. If they start cutting rates, that's going to be quantitative easing as well. However, if they start rolling over their current assets from their balance sheet, which they're doing right now, they're supposed to roll over all the maturing assets, MBS and US Treasuries, off their balance sheet. That's a little bit of a passive way of tightening, because that also affects the interest rates, but they're not actively selling the US Treasuries and mortgage-backed securities. They're just sitting back and they're letting all the maturing securities kind of roll over their balance sheet. So that's a little bit of a passive way for them to do quantitative tightening. But if they stop raising rates, that's going to be neither QT nor QE. It's just they're done. They're going to be at restrictive levels for longer. Colby says, I just sold a put on Meta at $85 strike. Was that super stupid? Well, at $85, Meta stock is super stupid. I would say that much. Like, it's insanely dirt cheap. Even right now, it's insanely dirt cheap. But let's see what kind of yields did you get. So what expiration are we talking here? Isn't that a pause? A pivot is when they drop rates. Yeah, so they're pretty much pausing on rates. All right, so November 1st, we're just talking 7 days. I don't think November 1st is actually an expiration, so I'm assuming November 4th. Oh, I would have to update this, so I can't even look at it. All right, let me just try it again. We're going to have to do it quick. December 16th. Okay, $267 per contract. So 8,500 minus 267. We're looking at 8233. So 3.24% for, yeah, so November, December 16. That's like, how many days is that? That's November's 30 plus 16. That's 46 plus another 3 days, 49 days. 3.24% for 49 days. Ask other community members, would they take that deal? Would anybody here take 3% for 45 days? Or call it a month and a half? 3% for a month and a half. Likelihood for Meta to drop down to $85 actually, considering where it is now low, because it's really, really oversold. But with Meta, anything is possible. $85 would be a drop of about 14% till December. They don't have anything coming up, so they're pretty much done for the year. It's going to be range bound. Yeah, that's not a horrible deal. 3% for a month and a half is decent, right? So 8. If you analyze that, that's about 24%. Yeah, that's not bad at all. I would say it's good. It's a good deal. Man, look at Google here, 4.5%. 4.5%. I'm gonna probably yeah. AMD, Gabrielle, we haven't covered. Let's take a quick look. So advanced micro devices pushing up 5. Well, back above my strike put. I've got so many options expiring on December 16th. That's unbelievable. It's unreal. Like, it's crazy how much cash, like how much collateral is going to be released for me on December 16th once all these options kind of literally just expire. It's incredible, like about a month and a half. But AMD here, 5.5% back over my strike at $60. So trading at $61.84 right now. That's really good. Next resistance really all the way up to $70, $71. That is going to be, of course, that neckline that we kind of broke down of for AMD. Intel here up 10%, so very, very nice move. RSI and MACD both pushing higher, and Intel deserves some love, right? It definitely does deserve a little bit of push higher because, you know, from January, this stock's been down 55%. So absolutely hammered. Very, very nice move to the upside from $24 to $25, 19%. It's got a very good yield, 5.5%. But yeah, I think investors really seem to like what they heard from the earnings. So still way below its moving averages, and you know, definitely below its range within which it's been trading at for a long time. So it's got a lot of work to do. Let's take a look at Pinterest. Alonzo, did you get any Google on the overreaction? I already have a cash ticket put at $91 strike. So if it gets lower, then that's great for me. I will be able to basically buy shares at $91 and in line with my fair value. But if it doesn't, then I still able to keep the premium if the stock price keeps going higher. So I do have a strike put on Google. Pinterest here, 11% on earnings. So we got a revenue beat and we got an earnings beat here for Pinterest. So surprisingly, this is one of the companies. Well, we can say that among all the big tech, I know Pinterest is not big tech, but among all advertising companies, among all tech companies, Pinterest is coming out strong on its own. Literally just you know, getting all that pressure from the markets and just coming out strong, pushing up 11% on earnings, beat on revenue, beat on EPS. So earnings last night, Kevin says, was decent, and yeah, very, very strong reaction for the markets here. So Road to Financial Freedom, Caddy, how far do you do your CSPs when 30 days is technically the most efficient length of time? So most of my CSPs are going to be 30 days, but again, it really depends on the rate of return, right? So if I can do like, say my goal is 2% per month, right? 2% per month is my goal, but if that stock doesn't offer 2% for that next 30 days, but instead offers 4% for the next 60 days, then I'll just probably do the latter, right? I'll just go for the 4% for the next 60 days because that's equivalent to what I would be making for the next 30 days. So, and of course, considering that it meets my criteria for the strike price that I'm going for, the deltas I'm going for. So the only reason I would go for a longer sort of expiration is if it's meeting my return threshold. I'm happy to sell a 1-year put if that gets me a 20% rate of return. Like if it gets me a 20% return on collateral, I'm happy to just lock in my collateral and literally just sell a put for the next 1 year. So that's the whole idea. And you know, those are the type of discussions, and you know, we're gonna talk about all of this when we launch our options portfolio in January. We're gonna literally be analyzing a lot of these options, a lot of these companies. We'll start slow. We'll start with just one stock, and I'll be selling cash to put on that. We'll start the wheel strategy with that name. And again, we'll be going over deltas. We'll be going over the Greeks and the expirations, the strike price, the stock itself. There's not going to be like a, we're not talking like 50 different stocks. We're not selling cash puts and covered calls on 50 different stocks. We're only going to be selling the wheel strategy on maybe 2 or 3. That's it. Like those are the only like names that we're going to be focusing on, and we're going to hone in on those companies and kind of really become proficient in those companies. So all right, let's see here. PayPal is literally dead. What is PayPal doing? Well, down 1%. They've got earnings coming up next week. So, that's going to be very, very interesting. They have shifted their engagement in terms of, they have shifted their focus to engagement. And of course, we had Elliott Investment also, part of the management now. So they're going to guiding them to lower their costs and kind of focus and become more lean. So PayPal definitely, in my view, also has potential, trading at a very reasonable to low valuation. Of course, we got Square. That's part of it as well, up over 1.2%. So this trade idea is still in play right now. So we'll see, what ends up happening with Block after they reported earnings. So actually, what are the 3 companies you're going to use for the wheel strategy? So that's the discussion that we'll have, right? So when we launch this options portfolio, we'll have this discussion. We'll talk about, which companies I want to personally own, because again, it's, cash puts, really the thesis is going to be which companies do you plan on holding for the long term, right? You don't mind getting assigned, because the whole idea behind the wheel strategy is you never want to sell a cash put on a stock that you don't want to own, right? If you end up owning that stock, you're just going to be stuck with 100 shares and then that's it, right? So we're going to have that discussion once we get to that level. So, okay. Alonzo, thank you so much. I really appreciate that, and glad you were able to, learn a lot and follow us on our journey here. So, first cash good put to the new options portfolio has to be SoFi. Oh man, SoFi, $5.40. It's a really, really low price stock here we're talking. So Milan, you're going to make a new challenge for this channel for the. No, not really. I don't think I will. It's just going to be private updates for all the members. So I'll be posting it on Vimeo, just like we do for all the other market updates and of course private videos. It'll just be more updates on Vimeo. SoFi. The problem is that 540 is actually really, really low price. I mean, let's see what the yields are like. So 30 days out for SoFi. Let's see, $4 is 11 cents. So what is that? 11 divided by 389. We're looking at 2.82%. That's not bad. That's not bad. I mean, I usually go for 2%. So I'm willing to even go to as low as, let's see, 350 is gonna be 0.5 divided by 345. Yeah, that's gonna be 1.5%. So we're gonna have to make a decision here. Delta's really low, so not bad. But the problem is that I would, we're talking, how much size are we talking here? Because at $4, it's gonna be a lot of shares. It's gonna be a lot of freaking shares. Yeah, it's just gonna be a lot of shares here. Yeah, we're talking like 25,000 shares. That would be just insane. Like, no, I don't want to do SoFi. But SoFi is at book value, you're right. Let's take a look at Teladoc for Oleg. So Teladoc here is up over 3% right now. Next resistance at $35. I know it's one of the Cathie Wood names here, but definitely been on a consistent downtrend, selling off so much. And they got very nice revenue beat and earnings beat as well. So Teladoc, again, in the healthcare space, I think the market cap is really, really low for them to really be acquired at this point, like 4.7 billion. Yeah, Oscar has like 25,000 shares, Kevin. That's crazy. But yeah, really, resistance all the way up to like $43, $44 in line with this previous level that we got rejected at. And of course, we got that 200 SMA sitting right there as well. SoFi better upstart. Trust due to, my sleep reminder is on right now. Is Caddy FOMO into bear market right before Jay Powell opened his mouth? No, I mean, I know that Jay Powell is not going to be too friendly on the markets here. I think he's going to do 75, but should be interesting, you know, what ends up happening to the market. Like, what type of reaction do we see? But yeah, we've got a lot of names here printing quite a bit. Amazon's only down 7% now. You know, we got Apple up 7.5%, AMD's up 5.5%, you got Google up 4.5%, Microsoft's up 4%, Nvidia's up 4%, Tesla's up 1%. And then, you know, in our entire watch list, we got lots of names. LABU 9%, Pinterest 12%, Vertex pushing up. Oof, Vertex really stings now. It's the only name that was actually green in my portfolio up until I personally exited. But yeah, this one's up over 43% year to date. So very strong gains for Vertex. So Gabrielle, Powell for 1% is not priced in at all right now. So, you know, we'll right now it's only 50 or 75. So right now odds for 1% from the market are 0. Don't forget, Caddy, he said that equities were too high when SPY was sitting at 400. People tend to forget. What, Jay Powell said that? I do remember he did say something like that, but who you're talking about, like Jay Powell? All right, let's take a look at NEO here for hold on. So so yeah, NEO 1050 is going to be that resistance. Chinese stocks under a lot of pressure. I've done a complete video on Chinese stocks as well, more recently, just a few days ago. So make sure that you do check that out if you haven't already. We talked about, you know, a lot of things that are influencing the sentiment and the overall technicality of Chinese stocks right now. So 1050 is going to be that resistance, support level at $8, and NEO also just trading at really, really low price to sales multiple. And I think it's like 2 times or 3 times price to sales. And of course, they just need to turn the corner towards profitability. And of course, things will start to work in their direction. But right now, it's just so much macro regulatory issues and scrutiny going on for NEO. So it's going to be a very, very tough time for them in the short term right now. InMode still in trend and newer sold my big position, waiting 50 in 3 months. Yeah, InMode's been an interesting one too, right? It's been very, very volatile. I've had both in the past, like both cash puts and covered calls and shares on this stock. So it's been a wild ride for InMode, but it's been also a very fun ride. It's been kind of bouncing back and forth here. $40 is really going to be that next resistance. And then of course, all the way up to this $52 range for this company as well. So that is going to be that next level to watch for InMode. So I don't think you've done one in a while, but when you can, do an update on Chinese stocks. I did one a couple days ago. I did one update on Alibaba, XPeng, NEO, Li Auto, like a lot of these. So I went over all of them in the past. Summerth, we did talk about Meta. If you want us to go over that again, I'm happy to. We've got a big gap to fill on the upside. Significantly oversold, obviously. Just been selling off. The sentiment and technical has been really, really weak. And yeah, I mean, we all heard the earnings call. We know what the earnings were all about. I'm going to be doing a more dedicated video on them very soon. I think it all comes down to just, you know, the metaverse, really. I mean, the investors in market have made themselves very clear that they don't want, you know, Meta to be spending billions of dollars in the metaverse just yet. They want them to pace that over a longer period. And if they don't do that, this is what's going to happen. So it's pretty clear at this point. All right, so we got S&P just breaching 3,900 like it's nothing. Literally like it's nothing, up 92 points on the day. 2.5% here. We got the NASDAQ pushing up 2.8. The Dow Jones is up over 822 points, and all 3 indices pretty much making a new high of day. Less than 30 minutes left till market close, and we're all making a new high of day here for the indices. So that's pretty incredible. And of course, a lot of individual stocks also pushing higher very, very much. Caddy, any prediction for Meta end of year? We don't really have any company specific reports or events coming up, but we do have the Fed on November 2nd and 3rd, and then another time in December. So, you know, fundamentally, it's obviously very, very deeply cheap, like dirt cheap, under 10 times earnings and under 3 times, 2.5 times sales. But the sentiment is really weak, right? So it really depends. If the sentiment keeps getting worse, stock price could come down like in the low 90s, possibly even breach 90s, come down to 80s. Completely depends on the sentiment, right? But if that improves, and if in the meantime, let's say the company comes out and says, look, we're gonna pace ourselves, and we're not gonna spend that much, considering there's more headwinds from an economic standpoint, then that can potentially lead to a 20, 30, 40, 50% rally for the stock. So oh, Mason, you just joined. I was just getting ready to kind of wrap up here and prepare for the market update video later today. And then promise over the weekend, we've got Amazon to cover, we've got Meta to cover, and we've got, yeah, that's it, Shopify to cover as well. From an earnings standpoint, let me see. I'm just going to take a note of all the companies you guys want me to do a video on, because I already have plans of doing a video on, like I said, let me just bring up a new color here. We'll do green, so it's pretty obvious. So, okay, I'm going to do Shopify. I'm going to do update on Meta. Update on Amazon. Apple is already done. Okay, Apple and Google and Microsoft are already done. So I'm going to scratch that. So Shopify, yes, I've added that to the list, but I'm going to scratch Microsoft. Microsoft's done, Alphabet's done, and Apple is also done. What else we got? Visa, yeah, the Visa's a good one. Visa's a good one. Visa and Chipotle, I feel like both of them. Chipotle, I was gonna do it, and then Enphase. Enphase, I feel like this entire board is gonna be filled up. I think everything that's on the board I should just analyze. And then Intel, yes. Kevin says Intel. All right, so we'll just do that. I think this was a mistake. I think asking you guys was a mistake. But okay, so far we've got Amazon, Intel, Shopify, Meta, Enphase, Visa, Chipotle. Pinterest? Fine, we'll do Pinterest. We got what? 3 plus 3, 6, 7, 8. 8 companies. That's 12 hours, 14 hours. I think that's easy. I think I can bang it out in like one day. Okay, so that's it. I'm going to close it up. Those are the companies we're doing. 8 companies, right? Perfect. That is it. Actually, you know what? Just for my personal sake, I also want to look at Exxon and Chevron. That's going to be a placeholder. I'm not going to confirm. Like, I'm not going to... Yeah, he's never going to ask us again. That's true. I'm never going to. But just for myself, I'm going to take a look at Exxon and Chevron as well. But those companies I will definitely do videos on over the weekend. All right, so that's going to be it, folks. Market's very, very green here, unless, of course, something happens in the next 20 minutes. I doubt the markets are going to be red. Nasdaq's up 2.75%. We got the S&P pushing through 2.4%. The Dow is up 2.6%, 2.5% very nicely. We do have a couple of trade ideas. Again, if you're part of our Discord, make sure that you take advantage of those. We had a trade idea on SOXL, recently started at $9. That was our entry. It's up over 11% today. And then another trade idea on Square. It's up another 1.3%. We're waiting for that breakout that we've been talking about. Those are the couple trade ideas. And of course, we got cash secured puts on Google, AMD, Nvidia, Apple, not Apple, but Tesla, and some of the other stocks as well. So thank you so much for joining. I really, really appreciate it. Make sure that you drop a like and of course, subscribe to the channel. And of course, join our Discord and Patreon if you haven't already. We will be starting a brand new options portfolio in January of 23. And there is a discount that's available till the end of this month for Happy Halloween, folks. I think it's Halloween weekend, right? It is this weekend, isn't it? Is it celebrated like on the 30th? When exactly is Halloween? Is it on the 30th? If it is, then happy Halloween. Hope you guys dress up and, of course, get some very, very nice, cool looking and funny, interesting costumes. So, again, be safe, and I will see you all in the next live stream. Market update video will be coming out after markets close. So thank you so much. Have a great weekend. I'll see you guys in the next video. Take care.